Good morning, everyone. Good morning, good afternoon, wherever we find you. How's everybody doing? Had a good weekend? Hope everyone had a good weekend. So, in the old days, I used to do a breakdown for the larger traders. I'm okay. I still have this stupid virus. You can tell my voice is still a bit messed up, eh? So I don't know. Got a bit of a, I like running a bit of a temperature, so hopefully I get rid of it soon. Bit of a pain. It's a sticky virus. So in the old days, and thanks for asking. So in the old days, I would start out with a sort of a larger time frame view, and I haven't done that for a while, ever since I got sick. So let's go over a bit of a larger time frame view for our traders who trade size, okay? And what we experienced over the last couple of sessions is a look above and fail of 7270. So the market look above, fail. So those who were shorting under 7270 were shorting into that overnight session. Came right down and filled the single prints of the last day of April. Right, so the early morning traders, now that happened hours ago. It happened at 11 o'clock my time. So probably about 3 or 4 in the morning in the US. So the early birds got the cheap supply. And this is something about market profile that's really cool. Hey Zath, how you doing? The nice thing about market profile, it tells you how much time we spent under a certain level, right? And you can use it on candles too. You can go and look at a candle chart and go, well, how much time did we spend at a 72.25? Did that bring in buying when we put it on sale, or did it bring in selling? Well, this time it brought in buying because there are people short from 2 days ago, and their orders came in right there, right in the middle of the night, right. So the smart money got some coverage there, the ones that were short. If you did a look above and fail and say you were short 72.60, right, and you were building a short position here, as the market came down, you should have covered. As it got down to the 72.10s, that's a nice trade. Now, those of you who want to know how to trade longer time frames, you guys want to hold trades for 30 points, there's a 50 to 40 point trade for you there. But, as we're going to look this week, as I get better, I'm going to try and do a class. I'm going to try and do a class on advanced trading techniques. And what you would have had to do is you would have had to build a short position between 60 and 70, and using that overnight high as you're out. Now here's the thing, right? All right, so when you're building that short position, what do you need? You need an account with money in it, right? Hey, Jerry, good to have you back. You need to have an account that's funded, right? That'll allow you to build a position, right? Number two, you need to be able to spend money on expenses. Because if you start coming over 70, you got to start buying back contracts. And then you come back under 70, you can add contracts. And then you put bids down at 57, 41, the close. And as the market comes down and hits those levels, you cover, right? So if say you were short 50 contracts between 60 and 70, and you covered some here at the close in the 48s, then you covered some at 41, then you covered some at 35, then you covered some at 25, right? And you had bids in, right? That's how an intelligent trader trades. He puts his position on, then he manages it. And then what happens is you use your orders, you put buy orders down here. So say you were short 50, right? You're going to buy 10 here, 10 here, 10 here, 10 here. And if those bids don't get filled, then you know you can buy back your position. If they do get filled, you can stay short. So you use your orders to tell you whether the trade is working. You guys understand that concept? You use the orders to tell you whether the trade is working, right? Because if you're short and you don't have a fill, say you're short 50 contracts, okay? You're a big trader, right? You're short 50, say at a 65 cost average, right? And you buy back 10 at the close at 48. That's good money. Then you buy back 10 at 40. Then you buy back 10 at 35 or 30. Now you've covered 30 out of those 50 contracts and you've booked a profit. Now if your lower two bids do not get executed, that means that they don't have to sell that cheap. Now as a short seller, you need them to sell it cheap. You need them to put it on sale. If they don't put it on sale, what's the point of being short? Cover your position, take your 20 points, and go home. Now, even if you average, say you average, 15 points, right? Maybe you average 15 points on each contract as an average, right? On 50. That's still a $37,000 trade. That's not, you got to build up to it, TBD, right? You got to build up to it, right? Remember, it's a skill, right? Right? Right. Yeah, we're stuck at VWAP right now, right? You can build up to it. Right? So that's the big big picture is, do we come and fill these single prints in RTH? That's why I want to see that overnight low get tested. Now it's a new week. It's a new month. How do you look at it? You want to sit and watch what's going on. Now, can I tell you something? Can I tell you something? If you look at the 1 minute chart, now everybody asks me, JJ, why do you use a 1 minute chart? Because the 1 minute chart tells you so much information. Let's go take a look, okay? Let's go look at that 1 minute chart. Okay. Right now, the 1 minute chart is telling us, hey, the market doesn't know what's happening. The market participants, look at this. Now for almost 4 hours, the market has been going check this out. For almost 4 hours, the market's going back and forth in these chopping sessions. So the market's trying to tell you, if you read the chart, don't look for a pattern. Look at the business. Now, I know you guys haven't been taught to look at the chart and understand the business. And that is what I try and do in our room at the Trading Syndicate. Okay? I try and teach you guys how to look at the chart and be able to look at the underlying business. Okay? If the underlying business is slow and choppy and there's not much follow through, right? Look at what's going on. Inventory, Matt, is still long because all of the volume is above yesterday's close, Friday's close, okay? But there's not much follow through yet, right? So what I'm trying to do, Matt, is I'm trying to teach you to look at the candles and go, oh, you know what? Look how choppy it is, right? See how choppy it is? See how slow it is? See how there's no follow through? So what we're doing now, pretend that you go, say you sell, I don't know, you've got a fruit stand, right? And you sell apples and oranges and whatever, right? Okay? And you go and you set up your stand in the morning. And you wait for the market to open, right? Oh, look. Now let's see who comes in. So it was slow in the pre-market. It might be slow when the market opens. It's so slow I didn't even open my trading software. 1 sec. Right. Let's see if we can go and test that Friday low. See how choppy it is even off the open. So you open the doors to the market, and you have a few people come in to buy, you have a few people come in and sell, but you're not really getting, there's not a lot going on, right? Give it some time. The trade we are looking for is the look below and fail of 43 3/4, which is just near the Friday low. So just wait for it, chill out. If you're short underneath the close, that's fine. There's 43 3/4. Right? It's selling off. Give it some time. We're still in the first 2 minutes. Lots of time. Let's go test that previous day low. Right? Now, if you're long 43, 44, put your sell orders out. I'm long 45, and I'm selling the 47s for a couple of points. Thank you, done. Told you that was the trade I was looking for. The look below and fail. Right? If you're still long, there's going to be sellers up here at VWAP. Okay? So you wait for your trades. You don't just go shooting them off. Save your bullets. Wait for your edge, right? I was a little high. I bought them at 45. I sold them at 47. 2 points is good enough for me on my first trade of the week. I haven't traded at all today. Now let's see what happens. So there's a little business. You dipped in your toe, right? What do they say in The Sopranos? You wet your beak a little, right? You know there's sellers at 48 and change. Let's see what happens in this candle. Can we take out the 48 halves? If we can't, we're going to come back down. See? Watch. There's 48 half. If you're long, there's going to be a seller. There's a seller. Right? The top of the candles are where the sellers initiate. Now, here we go, my friends. You see this grouping of candles here? That's the position. Okay? There's the cost basis at 47. So if you're a buyer, you want to be trying to buy them. If you've got a larger account and you want to build a position under VWAP, you're going to try and buy the 48s and the 47s in that area. And if we get up over 49, you know there's going to be a seller at 52. So make sure you get your sell orders in if you want to build a position. The key to building a position is to get your orders in, right? So say you buy 48 and 3/4, you sell a little at 49 and 3/4. See if they take you. If they don't take you, get out, start selling, right? This is not an A+ trade, right? You might have to cut contracts and take a loss, right? So I'm watching 47. Couldn't get down to 47. There's a seller at 50. There's bids at 48. Okay? So say you're long 48. Go put some sell orders out. Get paid, my friends. Right? I'm waiting for 47. Because it's just underneath the close. If I don't get it, I don't get it. That's okay. There's 47/4. There's 46 half. I don't see a buy just yet. But if you're building a position and you were long 47, 48, you'd start cutting contracts under 47 and adding as we get back up above. You have to be able to take that business expense. If you can't, don't do it. Right? Don't do it if you can't. Right? That's for bigger traders open only, right? And exactly as Jam says, for scalpers, wait for your edge. For larger traders, build your positions and manage your risk with size. Do you guys understand what that means? So long 48, sold the 49s. Just on two. You know, if I was long 47 and I had more contracts, I'd be out at VWAP. 3 points, right? 3 points doesn't sound like much. It's $150 on one contract, right? On 3 contracts, that's a $450 trade, right? You do that trade twice a day. That's $900 a day. That's 18 grand a month trading for 3 points. How many of you are making $18,000 a month doing this. You watch the offer. How do you look for trap shirts? You watch the offer. If you come into our room, I'll teach you. Watch the offer. I mean, really, 2 3-point trades with 3 contracts each, that's 18 grand a month before expenses, right? Everyone's trying to make 20 or 30 points a trade. Why not make 15, 20 grand a month and be able to relax? Right? What's the point in swinging for the fences when you don't know how to swing a baseball bat? Right? Doesn't make sense. Makes no sense. Take the small wins, my friends. It adds up. You will make money over time. You'll earn a living, right? Even if you can make 4 or 5 grand a month in extra income to add to your job, it makes a difference, right? Let's see if we can look below. I'm really curious now, if we're under the close, can we go and test that low from yesterday? Do you guys understand what I'm trying to teach you? Does everybody get that? I see a lot of people looking, I want to short the high, buy the low, hold it for 60 points, 50 points. You guys are trying to swing for the fences and hit home runs, but you don't even have a baseball bat or even know how to properly hold a baseball bat. So learn how to get a couple of base hits, right? Learn how to connect with the ball and actually hit it and swinging and striking out all the time. Right? I'll teach you how not to get struck out all the time. You can make a living. And then guess what? The method I teach is scalable in time and size, right? You got to be able to do that. And you know what? It's a tough market to trade. It's a wartime market. Now what we're going to do is we're going to scrub this area. What does that mean? Eventually, if we go back and forth like this long enough and we can't get underneath 43, we're going to take all this cheap stuff and try and go and sell it up here. Why? Because that's how the business works. Now, a lot of people say, aren't people shorting there? Yeah. When they get a cover, they're the ones who are going to push the price up, right? But short positions are not built for that kind of size. The market is built to go long. People go and establish a cost basis. They buy a bunch of cheap stuff at a cheap price and sell it for a higher price. That's how business works. Now, this process of going back and forth on a slow open is going to drive a lot of people crazy. Right? A lot of people just get really annoyed when markets are choppy because they're used to buying something and having it go up right away. That's the expectation. But that's not how the business is going today. It's a bit of a slow business day. It's the beginning of the month. We want to see, let's see how business is, right? Just take it easy. Take a couple of scalps. Relax. Let the market show you what it's going to do. It will. Just be patient. It's like when your wife's trying to give you directions when you're driving and you ignore her, right? And then next thing you know, you're off the freeway, you're in the hood, and you're getting carjacked. All because you didn't listen, right? The shorts are trapped under Friday's low. How can you tell that? Because so far the opening range cannot even trade down there, right? Can't even get down to 41. Every time it goes under 43, it's like Pac-Man comes and buys all the cheap contracts, right? Now it's kind of getting a little slow. Now once enough people short underneath 48 and 50, they'll start to cover. And you'll start getting green candles like the ones you're seeing. Now we've marked off the sellers at 52.5. They'll also be up there at 54, 54.5, excuse me. I'm sorry, my voice. I think I got Godfather voice again here. I apologize for that. I can't get rid of this cold. I think it might be kind of a COVID thing because I had to put a lot of hot sauce on my food this morning to get some flavor out of it. So it could be some kind of COVID thing. I don't know. Yeah, Symphony Trades, that's because you're in chop. So that's a good observation that you're watching the offer. It goes up and then it goes down right on the next candle. That's because the sellers are competing to try and capture the buying. Pretend you and 5 other guys are trying to sell. Say you're probably a young guy, right? So let's say you and 4 of your friends are trying to sell weed and you're running out of buyers. So you guys keep reducing the price. And then you raise the price and then you reduce it. Because the order flow, the flow of customers is not consistent, right? So that's telling you that it's choppy, right? That's a good indication. Then you can manage your trading, right? If the offer is moving up and down and up and down and up and down and up and down, it's making you dizzy. That means the flow of business is not smooth, right? What's the best is when you buy a position and boom, the offer just moves and moves and moves and moves and trend, trend, trend. That means new buyers are coming in, they're competing, and the sellers are, oh, let's yank the price up. That's always beautiful, right? Right now, it's a little choppy. We got sellers at 52, right? It's a slow Monday morning, Raj, right? We opened you think about it, like you go to Walmart, you see those videos, Black Friday. Black Friday, Walmart opens, and people just knock that poor security guard on his ass, and they bum rush for that plasma TV, right? But on a regular Monday morning, maybe you get a couple of people come in, then nothing, and then the more a few people come in, right? It's choppy, right? Chop is trying to tell you the business conditions that you are trading. Pay attention to that. It's a good observation, Symphony. How do you trade it? If I was you, I would wait for an edge. Right now, there is no edge. So when there is no edge, what should happen? Now, I'm a big believer. Yeah, okay, you did a trade and you got stopped off. Okay, good. Now stop. Right? That's good. Now you have information. You paid for information. Right? It's a cost of doing business. Soon you'll be able to look at a market and not trade it and not lose the money. But every once in a while, you're going to take a trade and get stopped out. That's okay. Right? What I do, right, is I'm a big believer in trading psychology before you blow up your account and lose all your money. See, now you can see the shorts are starting to cover, right? Once the shorts realize that all the supply under 50 is gone, they are going to start pushing price up to 55, 56. And we are going to take this cheap crap here and try and sell it here. So the large traders that are positioned long between 47 and 50, they'll be selling right now. They'll be banging them out with both hands. Sell, sell, sell. Right? There is a bid coming in, Howard. Is there any follow through? On a day like this, you might have to wait. Let's see if we can stay above VWAP. That's a good sign. If we can stay above VWAP, it means the bid is moving up. And the offer is moving higher. The bid will chase the offer. Just like Angelo Dundee would say, kill the body and the head will die. The bid will follow the offer, right? I don't think any of you guys were alive in the 70s. See, this is the shorts. Oh crap, I shorted 48, I added at VWAP. I added some more at 52. Oh crap, I'm trying to cover 53. They moved the offer up to 54. Right? There's a stop up at 56.25. Hey Jaden, how you doing? Long time no see. See where there were sellers before, let's see if it bids there. It's always something I'm always curious in. Yeah, we haven't seen you for a while. How's the family? Good to see you. Now, if we take that 56.25 stop, let's see if they sell into it or if we can get enough people short that we can force this thing higher. Right? If you get enough people short down here and you take this stop, it'll be like forcing the quarterback out of the pocket. Exactly. It's all about inventory. Inventory and order flow are what moves price. You know? Hey, Travis. Buongiorno. How's Italy, my friend? Are you back? Man, if I was 25 years old, I'd live in Rome. I'd live in Rome and I'd be out all night. Rome at night is amazing. Yeah, see, they took that stuff and they sold into it. How can you tell a sell-off and a pullback? Inventory. Right? A pullback is basically like a little sale. You know, like you've ever been in Walmart and they go, attention shoppers, for the next 20 minutes on aisle 17, Jimmy Dean Franks are going to be on sale 2 for 1. Get them while they're hot. That's a pullback. A sell-off is when they bought 3 container loads of hot dogs and nobody wants to buy them. So they're going to mark them down from $5 to 1. Get it? Generally, it's size. A pullback is just like a little flash sale to get people excited. We call it a backfill, right? You pull it back, and let's see if anybody bites. If they bite, raise the price. A sell-off, you sell, and more people start to sell, and more people start to sell. Good questions. So they sold into that 56.25 stop, right? Because, hey, if you were long 49, if you were long 100 contracts at 49, and you didn't sell into these 55s, 56 bids, I would fire you so fast your head would spin. Right? That's good money on size. If you're long 1,000 contracts between 48 and 50, sell the crap out of it here because everybody else is, right? It goes higher, who cares? Right? That's not your job. Your job is to make money on size. So that you can tell that they're selling into that quarter stop. That's good. Now let's see. This market is a bit of a pain because what it'll do is it'll make it look like it's selling, And then if it gets accepted above 57, see how their sellers are here? See, they're all right here. So mark it. Mark it off. So now you know it's going to come back down, look for buyers. This is what we call a pullback, right? We're going to pull it back like a slingshot. How do you know which one it is? It's called experience, my friend. And you should only be taking trades from the edges. If you came into our room, we'd teach you what an edge is. Hey, you know what? It's Monday. Why don't you try it for 3 days? It's free. This is a pullback. Let's see if it brings buyers. If it doesn't bring buyers, we'll bring it all the way back down to VWAP. Boom. There's a VWAP. There you go. Let's see. Can we bring in any buying over 52.5? Otherwise, we're going to have to mark that. Remember the stuff. Remember, that's why we use market profile. It teaches us this is the cost basis of the inventory. So they can sell it all the way down to 49 and still make money, right? Because their inventory is here. That's why they talk about point of control. It's where the stuff is priced, right? You can see the overnight point of control is here. And our current developing point of control is here. And that's just a fancy way of saying this is where we bought the crap. This is where we're selling it. And if we have to put it on sale, we'll come back to this area. Get it? So how you know Symphony is you got to sit and look at charts for a couple of years, my friend, or at least a couple of hours every day, right? And if you download the document that I have in the trading room, I've got a 5-step method for you to trade with common sense and make money. So you don't have to be going, is this a pullback? Is this that? Is this, right? If you're jumping around all the time, why don't you look at 5 certain things that you need, right? There are very specific ways that I teach people how to trade who don't know anything about markets. And that builds a base of knowledge. Because unfortunately, there's a lot of things you're going to be asking questions about and wondering about. A lot of it's not really going to help you make money, right? If you're a new trader, first of all, forget about shorting, not in this market. A new trader, the look below and fail. The fail to look below. The look below and fail. That is your ride or die go-to trade. It's at an edge. The edge means you're getting the best deal. That's why it works. If you trade penny stocks, you should move to ES. I'll tell you how to make money guaranteed in penny stocks. You want to know how to make money in penny stocks? I can give you a guaranteed way to make money in penny stocks. You call up the company and you ask to talk to their major investors. And then you get a consulting contract with them. You don't buy penny stocks. They give you that shit for free. Why would you buy it if they give it to you for free? Right? I've been in the penny stock market for 34 years. I have never once paid for stock. They give it to me for free. They don't pay anything for it. They're selling it to you for exorbitant markup. You don't even know that when you're buying a penny stock at 30 cents, somebody who bought it for 0.0001 cent is selling it to you. You know how you make money in penny stocks? You buy 1 million shares for $5,000. Okay? That's how you make money in penny stocks. Oh man, you got to learn how to sell then, right? Doesn't matter if you're a nobody. I have known guys who were a bartender one day and became a promoter the next day. Tell them that you've got, some sort of a marketing plan that'll bring in 100 million shares of buying, and then go get paid and then build it. Don't buy that shit. They give it to you for free. All you got to learn is how to, talk the talk. Hey, when I started in the penny stock game, I was a nobody too. I was a frickin' bouncer. And then I got a job at the government. Then I got a job working leads in a boiler room. I was a phone chimp. And I worked from 5 o'clock at night till 9 o'clock at night, calling people and asking them if it was the right address so I could send them information. Then the next couple of weeks, a closer would call and get them to buy the stock. Then I went to work for the company that was selling the leads. And that's where I got all my clients. Then I went to a brokerage firm and got a job as a trader, right? And I sold stock for clients. Their phone numbers are on OTC markets, man. Pick up the phone and start smiling and dialing. I used to do 100 cold calls a day. Start smiling and dialing. Learn what they want to hear and tell it to them. They'll give you stock. You get a consulting contract, they wire some stock into your account, you sell it. That's how you make money. All right, now let's see if we can get over 56 and 3/4. All right, never buy penny stocks. You get them for free. Yeah, very good, Jaden. Or Dave owned the company like we're going to, right? I just watched the 1 minute candle chart. Don't need to look at anything else. Double top. So there's a seller. There's your seller, right? They moved up here. Let's see if we get the bids coming back up over 58 now. What's going on in the room, guys? You guys still awake? Does Chop put you to sleep? Listen, if you were position long 47 to 50, you should be out now. If you're long 50, 100 contracts between 47 and 50, you should be out between 54, well, between 52 and 56. You should be clear. Out, flat, done. That's a nice morning, right? Even 5 points on 50 contracts is nice dough, right? For scalping, it sucks right now, right? If you're short 57, 55, go bid it underneath 54. Go put some bids at 53 half, 53 3/4. See if you can catch a little bit of cheap paper. Well, it's not paper anymore. It's all electronic. Oh, Symphony Trades, you got to pay me to tell you that, my friend. That shit don't come free. That's a different mentoring course. I'm sorry. That's 34 years of my blood, sweat, and tears. I'm not going to tell you that for free. Or you can come work for me, and I can get you cold calling. And I'll teach you. but I'm not going to tell you that. What about round trade commission? What is it? What's round trade commission on the micro? What, 70 cents round trade? Couple of bucks on ES? It's not bad. Does cold calling exist? Bet your ass it does. Oh, you can use Claude if you want, but it's nothing like getting a CEO on the phone. And I think we're going to come back to VWAP. See, that point of control from the overnight was here, right? You see? We took this cheap stuff, we sold it up here. We couldn't get anybody to buy it above 58 just yet. So now we're going to put it on sale. There's a little bit of pullback. Let's see if we can find some buyers somewhere around here and see if we can do this again, right? You see, you're always trying to coax buyers into the market, right? You want to kind of lead them by the hand. Buyers are very nervous, right? They're like baby deer. They'll run away really quickly if you scare them. So you want to start bringing price up gradually in a market like this, and they'll all start following you, right? And they'll just gently lead them up to an area where the other sellers are, and then you can club them over the head and take their money, right? You just lead them up nicely, quietly. Don't scare them away by lowering price too much. You lower the price too quickly, you'll scare the buyers away. That's why these algorithms are beautiful, because they teach you, they're programmed, they sense the order flow and they'll move the offer up and down depending on the order flow. It's beautiful, right? It's like watching a symphony, right? It's beautiful. And they can trade much faster than we can, so they can distribute. See, right now, nobody wanted to buy it over 54, so they're gently lowering price, but not too fast. Because if you drop the price to 52, 51 real quick, the buyers they'll drop down to 49. Right? Exactly, Raj. I don't really have any experience with sheepdogs and sheep. Right? Well, now you can hire algos and AI to help distribute stock. See, gently lower price and see if that brings in buying. See now, if they start, you get a couple of big red candles and it scares all the buyers away. And if that happens, they'll all get scared underneath VWAP. Now, the reason why I'm telling you this is because I know you're frustrated. It's Monday morning and you all want to make money. I understand that, but it's really hard to right now because it's choppy as hell and it's driving you crazy. So everybody take a deep breath and relax. You know, chill out a little bit. See, now you guys have all this mindfulness and meditation and, all that stuff, right? In the old days, what we'd have is we'd have the coffee cart. The coffee cart would come around right about now, about 6 minutes into this period. And everyone would start buying coffee and muffins and take their eyes off the screen and start relaxing a bit. Right? This is when the compliance guys go for a smoke break. Right? Everything kind of just slows down. And what we're doing is we're waiting for the next round of business to come in. So if you understand the business that's going on, right, even though algos are doing everything now, the business hasn't changed. When you turn on the market, you get that rush of customers. Then it slows down, right? And that's what's happening now. So right now, don't go long, short, long, short. And this is how retail loses money, because they don't understand what's happening right now. When you don't understand what's happening right now, how can you make money? You're going to go long, you're going to go short, you're going to go long. You're going to take 15 trades and none of them are going to work. So just chill and wait for edge, right? Yeah, I don't think I'm allowed to advocate the use of Marlboro Reds anymore, Hank. I remember one of the young guys asked me, JJ, did you meditate when you were on the trade desk? I said, no, we had Jack Daniels and Marlboro Reds. It was a different time. Don't get frustrated, just relax. Friday afternoons, Monday mornings, that's when a lot of traders lose money because they haven't tuned into the business. They don't know what's going on. They overtrade. I remember when I first started retail trading, I wouldn't even trade on Monday mornings. Ooh, look at that. Hello, Dolly. See? So we know there's an aggressive seller at 56, right? Could have been a little news, a little tweet. Either way, somebody got nervous and dumped their position. Good, good. That's how smart money makes money, TBD. They use your orders for info. If your orders are not getting filled, the market's trying to go, buddy. Nobody wants to buy it at that price. Or if you're short, buddy, hey, nobody wants to sell it at that price. Knowing the difference, understanding the business you're in is going to make all the difference. You can have all the patterns, you can have all the indicators, you can have all the trading psychology, you can have all of that. You can spend thousands of dollars on software and you're not going to make a red cent, right? There's no follow through. There are bids at VWAP, truth. Pretty simple. Now we're going to come back to cost basis. We went right from the top of 56 right back to cost basis. We do have a poor high. We've got sellers competing at 58, and they just got a little antsy. And now we came right back to where we bought it all in the overnight. See? Simple. Now let's see what the next order of business is, right? You know why there was no follow through truce? Because that was only one set of orders that took us from 56 down to VWAP or down to 49. Had there been follow through, there would have been more orders and we would have gone and taken out Friday's low. One set of orders out. They all hit the bids and left. See, that's the thing. You guys don't understand how follow through works because none of you have ever traded size. None of you have ever had to sell 1 million shares in a hurry. So you don't understand how that works. That's why we teach you only to trade from the edge, not to try and trade from the middle. Right? That way you have a less chance of getting eaten alive. Right? At least you got some payouts, Mike. Now start again. It's a new month, right? You guys are lucky that you have... Yeah, VWAP is the goalie. Exactly. It's like having Ken Dryden in net for the Canadians. Right? You guys are lucky that you have these funded accounts that you can take a payout and then blow it up. Because that doesn't happen in real life. Right? Eventually, once you get good at it, Mike, you're going to stop blowing up accounts. So especially at the beginning of the month, what you want to do is you want to look and see how has the business changed this month, or has it? And how do I adapt? You're not going to learn that by trading it. You're going to learn by sitting and watching. And that's going to really help you. right? Remember, you're like a sniper, right? You only have a few bullets. You don't have a, you don't have a Gatling gun like in Predator, right? And even then, Jesse Ventura ran out of bullets. Let's see if we can take this seller at 58. There we go. Looking for 60. If we stay over 60, we're looking for 63 and a quarter. The position is underneath us. We're going to try and sell it up here. We're creeping. Now everyone who shorted under 54, added at 56, they're trying to cover here. Let's see if we can get enough follow through. Nah, not quite yet. It's okay, Howard, it's Monday. Just relax. Remember, you're like a sniper. Be tactical about it, my friend. Don't overcommit. Okay? No, 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 no. Randy, that big drop, let me explain what that big drop is, okay? Randy, this big drop that we had here, right? Or even this big drop. You see this one? Right? That means somebody with size wanted to get out of size fast, and people were competing. So they said, excuse my language, fuck you and hit every single bid. So Randy, if you're my client and you give me an order to sell 500,000 shares and the stock is trading at $5 and you're in a hurry to get out of those 500,000 shares and I see a bid for 300,000 shares at 375, I will go and hit that bid so fast it'll make your head spin. I'll take the stock from 5 all the way to 375, fill that bid, let all the suckers come back up thinking the selling's over, and then boom, hit them again. It's not to trigger the stops. The stops get triggered because of the size, not due to the size. Does that make sense? Good. See, I used to have this Swiss banker that I used to trade for. We used to call him Uncle. He hated my guts. And the only reason that he traded with me is because my client had $400 million with him and he made him trade with me. Right? So he would call me and he would be screaming, "Where's my fill? Where's my fill?" So I got him in one ear screaming and the market maker in the other ear trying to get the trades done. Right? So, and these guys, when they have a lower cost basis, right, they don't care whether they sell it at 56 or 54. If they paid 48 for it, they'll sell it all the way back down to 48 and just get rid of it. Right? That's how size works. Right? And you don't want to get in the way of size. It takes some thinking because you guys have never done it. right? It's okay. Don't worry. This is where you learn. That's why you're in the room. Yeah, keep on trucking, Mike. Have a good one. We'll see you tomorrow. Start again. Size moves price. And aggressive size moves price aggressively. Right? And the reason that happens is because they'll be trying to sell 56 and they'll see 20 other people selling 56. So they'll just blow it out, get rid of it. Right? Because the goal in this business is to take inventory, to take your cash and buy inventory, and then turn that inventory back into cash so you can buy more inventory and turn it back into cash. That is the cycle of life in markets, right? That's what trading is about. Now, investing is a completely different animal. Trading is about taking inventory and turn it into cash. It's about turning over your inventory. Have you guys ever heard that? It's all about turning over your inventory. The more you turn it over, the more cash flow you produce. So if we get above 63 and a quarter, we'll be looking for this just level under 66, where the stops are. Now my target for all this madness is 72.70, which is just up here. I want to see if they sell into that or whether it holds. Let's see. Remember, we are at all-time highs. These levels have not been tested. Only, Friday and in the overnight. So let's see what happens when we go and try and tickle that 72.70. Oh. So remember what I said before the session. We're going to take all that inventory that we bought underneath 50, and we're going to try and find a place to go sideways. We're going to take it up as high as we can, and then we're going to go sideways to try and get rid of it. If enough people shorted it underneath 56, 54, 50, then we'll get a nice move up and we'll stay over 70. Hey LC, how you doing? It does take a while, Hank, and Hank's been in our room for a while. Some of you will have learned trading from all sorts of crazy places. And you'll have a mind full of mush, and that's difficult. See, there's that 72.65 and 3/4 where I drew the white line. It hit that to the tick. Map out where your sellers are going to be. So if you were long at 62, you could sell it at 64. 65, make some money. Because if you know there's going to be sellers up there, why wouldn't you sell? I mean, if you're a large trader, you can put some orders at 67, 68, but you can see they're selling into it at 65. Can we get a lift? Can we get it back above 66? There we go. One tick. Next stop will be 68. If you're long off the 64s, make sure you're offered. As soon as you're long, you should have your sell orders out immediately, instead of moving your stop and chasing the market. If you know where you're taking the trade, you know where the exits should be, and you should put your sell orders before the exit. That way you can actually make money instead of like having it come back down. Like, the worst thing is traders who move their stop to break even. And they're in profit, and then they let the trade come back all the way down to break even. And then they end up paying commission on a trade that was profitable, where they let the money slip through their fingers. There is no valid business reason for putting your stop at break even. What it means is you don't know what you're doing. Putting your stop at break even is a key sign that you have no idea where to enter your trades. Because if you knew where to enter your trades, you'd know where to put your stop. And it wouldn't be based on risk reward. It would be based on actually what the hell's going on at the time. Now, if you come into our room, we will teach you how to do that in a practical way, so you don't have to monkey around with all this RR crap. We will teach you common sense. So if you went long at 63, 64, say you went long here. You went long at 64. Your stop should be here at 63. And your sell order should have been here at 65, 65 quarter. That's how you make money. Right? When you put your stop at break even, it means you don't know what you're doing. You're hoping the trade works out, and you're just trying to break even on the trade, which means you don't understand the business, and you're not trying to capitalize on the business. Okay, so let's see if we can stay underneath 63, or is this a look below and fail of 63? Give it some time. Give it some time. Yeah, break-even stops are just a sign that you don't know what you're doing. And that's okay. Nobody knows what they're doing when they first start in this business. Right? You don't leap out of the womb knowing how to day trade. It's not something that you're taught in school. It's not, I know guys with MBAs who can't trade their way out of a wet paper bag. Right? This stuff's not taught in B school. This is common sense, and it's business. And people who sell groceries understand more about inventory than people who have MBAs. It's practical business information. And that's what we teach at Trading Syndicate. So this is a look below and fail of 63. So let's see. If it holds 63, 64, you will go along. Now you know that there's a seller here, right? Look. There's your seller. Can we get above that? If you miss the trade, no big deal. No big deal. There'll be lots of other trades. If you bought 64, you should be selling 65, 65 half, 65 quarter. There's sellers here. Your stop would be under 63 if you were long 64. So as soon as you're long, you put your sell orders out. Right? Then you're not fumbling around. Right? So if you have a 65 and a half sell order, a 65 and a quarter sell order, right? And you're long, say 64, and it's not getting taken, it's not getting executed. Get out. Hank, if you've just come back to trading, you should just be doing the look below and fail. You should not be mucking about with shorts right now. Just so you know, okay, brother? If you're just back in the room after a while, just use my zones and do the look below and fail. We're at all-time highs. You know, if you haven't been trading for a while, be careful shorting because we are at all-time highs, and the position is all underneath 57. So just watch out. Okay. Got 2 minutes till the next half-hour bar. Does anybody have any questions? It's a tricky market short, Mark. I mean, Hank, because there's no frickin' inventory above us, right? And we're all at all-time highs. We're going to distribute here. We're going to go sideways like this now. So we came underneath 63. We found that bid. If you've been away from the markets, they've changed considerably over the last 3 weeks. Now let's see, when it sells off, look where it stops selling off. And then when it moves back up, look where it sells. Spend some time watching that. Remember how I said it was going to go back and forth? That's exactly what it's doing. This is distribution. Right? This is distribution. What are we distributing? We're distributing this and all of this up here for profit. We might put it on sale. And when we put it on sale, see where they stop selling it. Wait for the next candle. So if you did a look above and fail of 63 and you're short 62, put some bids down at 60 and see if they get filled. If they don't get filled, then you know they don't have to sell underneath 60. It's a very different market. There's a war going on. We're at all-time highs. And it's very, very tough to trade and scalp when it's this choppy, right? So just take it easy and kind of like just, you know, like when you get into a strange swimming pool, Hank, don't just jump in. You know, dip your toe in here, there. You know that document I gave you like a year ago? Remember that document I gave you, the 5 steps? Go back to that. That's why I came up with it. Right, so we got a short position here, my friends. Big short position between 58 and 60 and 3/4. That's where the bid is right now, right here. So a short position is right here on the candles. Short position means there are buyers, okay? Exactly. Now remember, before I leave you, none of the single prints from the end of the month got filled. They got filled in Globex, but no fill in RTH yet. So they're still valid. So all these shorts who didn't get that 3 in the morning position, the shorts who didn't get that 3 in the morning cheap stuff, they're still short. That's why the market is bid, bid, bid. Okay? Thank you guys. Really appreciate you. Have a wonderful, wonderful trading day. Reach out if you need me. I'm getting my voice back. I'm going to start the one-on-one coaching again tomorrow. The sessions won't be an hour. If anybody is interested in one-on-one lifetime mentoring, reach out. I'm around. Thank you very much. Trade well. Thanks, Arcroy, and thanks, Arcroy, for being so patient while I've been sick and checking up on me. I really appreciate that. Thank you, everyone. Have a great morning. Stay out of trouble. If you need me, I'm around, okay? Bye for now. Much appreciated.